5 minutes away from the closing bell, the Dow Jones Industrial's up more than 200 points. But early on in earnings season, we have seen some pleasant surprises, such as Intel, and then, if you could call it pleasant, J.P. Morgan losing 50% year over year, but nevertheless better than expected. But then we've had the disappointments, David, such as General Electric.
Yeah, and General Electric hasn't had a rebound since it got killed on Friday. Should we be feeling good or bad about what's ahead? Our Fox panel is back to talk about it, including Peter Schiff. He is author of Crash Proof, Biz Radio Network host Mike Norman, Jordan Netburn from Axiom Capital Management, and Yoran Brook from the Ayn Rand Institute. Mike, first to you, because the market is popping. It's up over 200 points today. Is this unbridled enthusiasm warranted? I mean, we did have bad earnings from J.P. Morgan, and yet it popped.
They were earnings, okay? They still made money. That's what's important, and this is really the story of the U.S. economy. Look, we've had problems in the financial sector, and even some of the firms within the financial sector, you're giving back some of the earnings that they've made over years. They're still pulling earnings in. The rest of a lot of these businesses that have large exposure to overseas, are doing very, very well. Look, you mentioned GE. It's a ridiculous overreaction by investors and the media. You have a $200 billion corporation that comes in with profits $100 million less than what was the forecast. Come on.
Well, look,
Colin, 19% rise in profits, and they beat expectations. And then again, you have Intel predicting a 56% gross margin for 2Q. Do you like what you've been seeing lately, or are you not doing the happy dance like Mike is about these numbers?
Well, I think it depends on what day of the week you're looking. Fortunately, what a difference a few days makes. I mean, you're looking last week, GE kind of totally ruined the party. Today you've got Intel, you've got Coke. We've got J.P. Morgan. I think there's a sense of relief, especially after the last year that we've had with the uncertainty of the whole credit issue. And whereas we're still making our way through the credit crisis, companies willing to actually come out and, albeit lowered estimates, hit them, beat them, and clean up their books, so to speak. So this predictability and this visibility is much more encouraging on a day like today.
Peter Schiff. Encouragement is not a word that we associate with your analysis of the stock market. However,
it's hard to be encouraged if you're investing in the United States on the day the dollar today hits a new record low.
Yeah, the euro against the euro.
Well, the euro's up about 160. Look at the oil is what, $115 a barrel right now? So sure. Our companies are earning more dollars. Big deal. The dollars they're earning are less valuable. In real purchasing power terms, American companies are earning less purchasing power now than they did before, and their shareholders are worse off.
The profits are growing. They're not phony. Come on. You're entitled to your own opinion. You're not entitled to your own facts.
Okay? Hey, guys, there are other folks here. Liz, why don't you direct it elsewhere? Go ahead.
I would love to hear Yoran's opinion on this. Yes, we did see a ridiculously weak. Don't go to Europe, anybody. $1.59. To buy you one single euro, but bringing it back to the United States, you do have some positive outlooks for certain areas. There are companies that are making money right now.
Sure, but bringing it back to the United States, PPI yesterday was 1.2% for last month. We've got real inflationary pressures in this country. That's why the dollar's down. That's why oil is so high. And look, yes, there's some good news out there, and overall this economy is far more resilient than I think many of us expected it would be. But there's still a lot of bad news out there. There's still some banks that are going to report earnings later this week, early next week. There's National City in Ohio that nobody wants to touch, nobody wants to buy. You could see the largest commercial bank go bankrupt in American history. They can't find capital. So there's still bad news out there. Let's not get too excited.
2002, that was a terrible time to be selling stocks. There was a lot of bad news in 1980. That was also a terrible time to be selling stocks. So I mean,
true, there was bad news in 76, and it was a bad time to buy stocks, Mike.
Okay, guys, well, we are reporting good news, and we're pleased to report good news. Let's get a check in the market. Dow Jones Industrial Average is up 218, and the NASDAQ is up 2.7. We're going to talk about the NASDAQ.